It's time for today's three-stock lunch. With our trades is Scott Nations, president of Nations Indexes. Scott, it's great to have you here today. And we got to start with the stock everyone is talking about. Nvidia went from down 15% from the highs to snapping back almost 6% today. What would you do with the stock here?
Nvidia is a buy, and the scale of the rally over the last couple of years makes it easy to think it's in a bubble. But the forward PE is only 42.5. So that's not a bubble. I mean, if you want a bubble, in March of 2000, the PE for Cisco was 196.
Wow.
So talk to me when Nvidia gets near there. So we get to buy because the rush to AI is not going to ease. We get to buy Nvidia, which is the premier name in the space on a pullback. And the company has earned this PE. The last quarter, year over year, increased revenue 255%, and operating income increased by 6 times. So it's performing. It's a great company making what everybody wants and at actually a reasonable valuation.
All right, let's move on next to Walmart, under pressure today after the company's CFO made some comments admitting the current quarter has been challenging. Your thoughts about Walmart in the short term?
Walmart is a short-term sell. The stock raced from about $60 in mid-May to nearly $70, up 30% over the past 12 months, and has a forward PE of 27, which is really tough for me to stomach for any retailer that isn't named Costco. Particularly in a situation where Walmart's customers are really going to be battling inflation, probably more so than most other retailers' customers. The stock got to overbought, and it's pulling back from that condition. I think it probably has another 10% to go to the downside to get back into equilibrium and get out of that overbought situation.
Interesting. Rarely hear bears on Walmart. I mean, you might be one of a kind right now, so we'll watch and see if that bears out. Speaking of kind of moving to the downside, Pool is down on lowered guidance. They see persistently weak demand, sluggish consumer spending, down about 7% today. How much more room could they have to fall, or do you think it's finally an entry point?
No, Pool is a sell. Pool Corp makes, guess what? They make pools, pool hardware, pool maintenance equipment. Worst performer in the S&P all day. As you pointed out, they cut 2024 guidance ahead of earnings, which come out on July 25th. Year-to-date revenue is 6.5% behind where it was last year. The EPS guidance was 18% lower. As you pointed out, the company blamed what they call discretionary pool spending. That sounds a little bit like an oxymoron to me. But what they mean is that if you have a pool, people are paying to maintain it, but they're not selling many new pools. I guess everybody who wanted one or bought one in the pandemic, or at least they bought one if you couldn't afford an RV or couldn't get a hold of an RV. So the company is a sell. The chart is horrible. Nobody wants a brand new pool, and earnings are collapsing.
Ouch, 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 ouch. I'm going to go soak in a pool somewhere this afternoon. We almost put one in, but I pulled the plug on that one. Scott, thanks very much. Appreciate it.